So we were here last year when we presented that 16 months ago. Like all MDs, we actually wave our arms a lot and we make a lot of forward-looking statements, which was effectively a promise to actually deliver something into the future. So last year, our forward-looking statements looked a little bit like this. We said we would put out a Mandela mineral resource estimate. We were going to focus on improving the quality of that resource estimate. We committed to drilling 30,000 metres across our projects in that first half year. We were going to grow Hestia. We were going to demonstrate that Feville, in our opinion, had the opportunity to deliver several 100,000 ounce scale gold deposits which we could feed into a Mandela process plant. And the other statement we made was that we said Mandela was of the scale and quality that almost certainly ensured that this project would get developed. So if we fast forward to today, this is what our scorecard looks like. The Mandela resource update, we did that in July of last year. We forecasted the September quarter. We added 231,000 ounces at an exploration cost of $18 an ounce. In regards to improving the quality of that resource, we focused on converting inferred to indicated. We increased that by 69%, and we're just at 700,000 ounces of indicated mineralisation at Mandela. The 30,000 metre drill commitment, well, we hit 32,000 metres. The growth in Hestia, well, we grew that by 583%. And recently we've been having some fantastic exploration success at Camperman, which is one of our targets for Feville. So we are well on our way to demonstrating that Feville has this opportunity to deliver several 100,000 ounce deposits into this Mandela process plant. And most importantly of all, we put out a scoping study in September last year, which has demonstrated that Mandela is an exceptionally profitable open pit development opportunity. So we're actually 6 from 6 on those commitments. Now, our projects are located in the heart of the Kalgoorlie Goldfields region. Looking at this map, I used to drive from Kalgoorlie to Camperman 5 days a week for 6 years, so I'm actually pretty familiar with this area. The yellow triangle there, South Kalgoorlie, which is just under the Feville operations, I was a mill operator back in the 90s. I actually had hair back then, and I met my wife, and she was a pit technician. So we are infinitely familiar with this area. Given the demographics of this audience, there's probably a fair few of you that have been grey nomads, and if you have, you've had the privilege to travel into WA, you almost certainly, it's almost a rite of passage to drive through this Kalgoorlie Goldfields region. Now, for those of you that haven't had that opportunity, I'm just going to play a small animation. I'm not going to have the sexy voiceover like AJ had, so you'll just have to listen to my voice. So this is Kalgoorlie. We're going to travel 14 k's to Feville, so you can actually still see Kalgoorlie in the background. So that's our Feville tenement package. South Kalgoorlie is right there on its doorstep just to the south. Travel another 30 k's and we end up at Camperman. You can see the 20 million ounce St Ives gold camp, and you can see Mandela just 20 kilometres from both Camperman and St Ives. So this is a fantastic area to be looking for gold. Now, when you're trying to understand the scale of something, often it's really good if you can actually see that scale next to something you're familiar with. So what we've done is we've decided to drop this mineralisation smack bang over the top of the Royal Pines Resort. So you can see the Royal Pines Resort there. This mineralisation has the capacity of stretching from Royal Pines to the other side of Bundle Road all the way to the east. This is a significant piece of mineralisation and is located in the heart of the WA goldfields. So we have been drilling 40,000 metres per annum for the last 4.5 years across our projects. Over that period of time, we've grown our mineral resources more than tenfold. We've recently started a 14,000 metre drill program at Mandela to look to infill those resources, to continue to convert the inferred resources into indicated, which will support the declaration of a reserve as part of the pre-feasibility. Just to reinforce, Mandela and Feville are cracking projects and they are located in the heart of this Kalgoorlie goldfields. Corporately, we raised $7 million in April of this year. We're up about 100% since that placement. The institutional representation on the register has moved from about 5 to 8.4% as of the 31st of July, and we have got US-based funds buying on market at the moment. Institutionalising this register is important. The funds will start to see the opportunity and they start to move down the curve, which is what we're seeing now. From a corporate perspective, we've only made one change to the board. We've added Mark Connolly as our non-executive chair as a management team, we've actually been together for 4 years on this project and 4 years on Egan Street Resources before that. So we know what we need to do to take this project through to development. Now again, not wanting to pick on the demographic in this room, but I'm assuming that a lot of you people have actually invested in real estate before. And anyone who's invested in real estate understands the importance of location, location, location. And that is equally important when you're looking in mining and exploration. So I would argue that that is a seriously important aspect, and we certainly have that here with our projects. We have 1.4 million ounces in the heart of the Kalgoorlie goldfields. Importantly, we have 1 million ounces in one large, long-life open pit, which is Thea. So that's the Mandela Gold Project, 4 deposits, 3 of which went in the scoping study. Now, to put this into context, we did our scoping study at a $2,100 gold price. If we move the gold price to $2,400, Iris, which is the deposit that didn't make it into the scoping study, 102,000 ounces from Iris drops into the study. And I would argue that a $2,400 design price is still conservative, given the spot price today is $3,700. So I know we've just been bookended with copper and lithium and uranium, but I'm going to say that gold is certainly the commodity to be in at the moment. We have had 3 years sitting on the sidelines, people asking us whether we have any lithium rights on our gold projects, but certainly you want to be in gold at the moment. It's record US gold prices, it's strong support for the producers on the ASX index, and the interest in the juniors is starting to move. I mean, they are starting to move down the curve, but it has lagged our producer brothers. And notwithstanding that, given that the market at the moment is probably ascribing $50 to $60 of enterprise value per ounce for this junior end of town, what we focus on is making sure that we are growing at sub $20 an ounce. That's how we add value to our shareholders as we wait for this interest to really start to build again in the junior end of town. That's why we switched our focus to Feville. We have resources coming out later this month, and I'm very confident that we will demonstrate that Feville is growing at sub $20 an ounce. At Mandela, our last 2 resource estimates, we added 500,000 ounces at an average of $17 per ounce. That's the benchmark. That's why we're striving to continue to meet at our projects. The interesting thing is when you put out a study, there's some people in the community who say, do not put out a study, you get put in this box. The box says, this is how big you are, this is the size of your prize. So I do want to spend a minute just talking about why Astral Resources does not deserve to be put in that box. So this slide just shows this Mandela granite. It is a large granite intrusion. The mineralisation is typically hosted along the contact, the western boundary between the granite intrusion and the sediments. And the best way for me to illustrate this is just with a couple of pictures and some numbers. So where we have drilled our resources, the depth of drilling is 151 metres. If you remove that drilling, then the average depth of drilling across this intrusion is now 50 metres. And if I take away the drilling and just leave the drilling that's deeper than 50 metres outside the resource, you certainly end up with a very blank canvas. So between Thea, Iris and EOS, those resources occupy only 13% of this granite intrusion. Another important point to note is Thea is still open at depth. We were drilling 450 metre deep diamond holes here last year. We were still getting this stockwork vein assemblage, quartz and gold, at the bottom of hole at 450 metres deep, which is well below the current base of the optimisations for the resource. So we have growth options along strike and at depth. Now I want to move on to the scoping study which we put out in September of last year. The thing about this study is the detailed mine design, the scheduling and the geotechnical work is already done at a DFS level of accuracy for this study. The mining cost assumptions and the metallurgical test work, well that's been completed at a pre-feas level of study. It's the process plant OPEX and CAPEX and the non-process infrastructure that has been done at a scoping study, and that's why the study was pushed out at scoping level of accuracy. So the takeaway for you guys is that as we work on this pre-feasibility, we are focused on growing the size of the prize, increasing the production target, because the guts of this technical work is already done to a pre-feasibility level of study or better. So if we just look at the high-level numbers, it's 100,000 ounces per annum over the first 7.5 years. It's 1.3 grams per tonne. the strip ratio, including all of the pre-production mining, and plenty of companies bury a lot of movement before they declare commercial production. Our strip ratio is 6.2 across the life of the project. And also from a mining cost assumption, we've used a BCM mining rate of $11.60 per tonne. So we'll go out to market as part of the pre-feasibility to understand where that cost assumption is. But our developer peer group have been putting out studies over the last couple of months using a mining cost assumption significantly lower than us. So we are very comfortable that those cost assumptions will hold up as we move into pre-feasibility. If we look at this study using the spot price today, it costs us $31 to land a tonne of ore on the ROM. It's $19 to process it with your process costs and your G&A costs. So an even $50 a tonne to actually start creating bullion. At a 1.3 gram per tonne head grade, 95.7% recovery, and a spot price of $3,700, there is $100 per tonne of free cash flow margin. You times that by 2.5 million tonnes per annum, which is the design rate, and you're getting $250 million worth of free cash flow being averaged over 7.5 years. A couple of other important points on this project. The internal rate of return was 73% at $2,750 gold price. It's actually 140% at spot today. This has an exceptionally quick payback. It is simple bulk scale mining. It is fantastic metallurgy, and it is tried and tested processing. So now, just leaving Mandela, I want to talk about why we've switched our focus to Feville with some of our exploration funds. So we made that commitment that we believe Feville has the capacity to generate several 100,000 ounce deposits, which will be high grade and we can feed into Mandela. That is a commitment that we still stand by today. We're chasing that high grade ore, which is close to surface, that we can feed into the Mandela process plant early in the life of the mine. That is our opportunity. So that square box, over the first 5 years of Mandela, we processed 12.5 million tonnes. 4.5 million tonnes of that is actually at an average grade of 0.6 grams per tonne. So notwithstanding that it averages 1.3, there is a low-grade component going into the process plant. If we can displace that with 1.1 to 1.3 grams per tonne from Feville, it's an extra 75 to 100,000 ounces worth of production. So straight away, we become a 120,000 ounce a year producer. That is the opportunity. And look, at Astral Resources, we do really value our credibility. If we make a commitment, we want to be able to deliver on that commitment. So there's two images here where I want to show you why we are so confident in our ability to deliver on this opportunity. That's a plan image of Camperman. The mineralisation already extends for 450 metres along strike. It remains open to the north and east, and each of those purple dots is a plus 50 gram metre intersection. This next image is a cross-section of the southern zone of Camperman. We have 30 metres of mineralisation plus 2 grams per tonne extending from 25 metres below surface to 175 metres of depth. Those resources will be out later this month. So we'll put resources out on Camperman, Rogan Josh and Think Big. And I'm almost certain that I'll be able to point to those resources and say, this is how we're realising this opportunity. So to summarise Astral Resources, we made 6 promises to you guys as an audience in May last year. We have delivered on all 6 of them. The scoping study at Mandela shows that it will make a lot of money, and it has been done to a very high level of technical detail. So there are no negative surprises as we move forward towards pre-feasibility and definitive feasibility. This is a conventional gold deposit from mining through to processing, and it screens very, very well when you compare ourselves to our developer peer group. The study has used conservative assumptions. If we use spot, then you have an internal rate of return of 140%, you have a $1 billion net present value, and you have $1.5 billion worth of free cash flow. Mandela still presents with significant resource growth upside, and Feville has that potential to deliver high-grade ore early in the mine life to really drive those improved financial metrics. As a commitment, the pre-feasibility will be bigger and better than our scoping study, and probably most importantly of all, we have no peers in our region that have the development opportunity that we have at Mandela and Feville. Thank you very much.